This is not a stock call. This is a demonstration of how Fintelligent turns Nike's 2026 annual filing into investor questions. Nike loads with a diligence score of 79. The filing has high data confidence, but the system already flags 4 severe items, 7 to watch, and a habitual cash cycle break. The questions are not generic. Fintelligent routes them by role. The CFO and controller get revenue to receivables questions, operations gets collection and DSO questions. Then the tracker keeps the discipline honest. Each question carries a rule, a formula, source quality, and a status. This is how the investor follows the audit trail instead of chasing opinions. The evidence package says it plainly, not reliance ready. That does not mean Nike is wrong. It means the high priority questions still need support before an investor relies on the answer. In Driver Lab, the baseline implied value per diluted share is $80.27. Now we test the inflation and pass-through assumption. With auto adjust on, inflation at 4.5% and pass-through at 75%, the DCF updates live. The implied value moves to $67.23. The delta is the boardroom moment. About $13 per share, or roughly 16%, disappears under the inflation case. The question is, what operating proof offsets that? The trend table gives the sharpest variance. Days sales outstanding is 47 days versus a 36-day average, plus 2.01 sigma. Cash flow to revenue is also below history. Why is that not good? Revenue grew only 0.2%, while receivables grew 25.7%. That is a cash conversion question, and potentially a revenue quality question. Restatements are handled carefully. The app shows no declared non-reliance filing under item 4.02. That is clean for declared restatement risk. But it still shows historical representation changes. There are 10 material revisions above 2% and 9 smaller revisions below the materiality floor. The distinction matters. Cash discipline brings the story together. The primary leak is revenue to receivables. Fiscal 2026 revenue grew 0.2%, receivables grew 25.7%, and the note evidence is attached inline. This is why the workflow can scale. Fintelligent can ingest SEC Edgar data, market context, private CSV and Excel files, mapped work papers, trial balances, and annual report PDFs. The investor takeaway is simple: read the filing, find the divergence, trace the audit trail, then ask the better question. That is the Fintelligent promise.